Hello viewers, welcome to my channel. I'm Hasham. So already I have completed 10 short problems on holding companies and one main problem on holding companies regarding consolidated balance sheet of holding company and subsidiary company. If you have watched the earlier videos, you got the command how to find out the goodwill and capital reserve, capital profit, revenue profit, minority interest, all these basic calculations, and also how to make the consolidated balance sheet in the last problems. So if you have not watched the earlier problems, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting. In that subject, select the topic, this is holding companies. Watch the earlier videos, introduction part and the first part. Definitely you will get a good command. Then you can easily understand the remaining main problems. I have explained you in detail regarding what is holding company, what is subsidiary company, what is minority interest, how to make the consolidated balance sheet applying AS21. So apart from this, I have uploaded a number of subjects videos in my playlist. So go to the playlist, select your subject, select the topic, watch the video. Definitely you will gain a lot of knowledge from these videos. Now I will start the second main problem on holding companies. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready before start watching the problems videos. Now I am reading out the second problem. See carefully. Problem number 2. H Limited acquires all shares of S Limited on 1st 10/2003. 1st October 2003. See here. H Limited acquires all the shares of S Limited, means no minority interest. The subsidiary company is called wholly owned subsidiary. From the balance sheets given below, prepare consolidated balance sheet. So liability side, share capital, shares of rupees 10 each, 5 lakh rupees H Limited, 2 lakh rupees S Limited. That means when we make the consolidated balance sheet, we take only the share capital of holding company. We should not take the share capital of subsidiary company. Reserves on 1/4/2003, beginning of the year. Beginning of the year, reserves were 2,50,000 in H Limited. This will appear as it is in consolidated. Whereas S Limited, this 1/4/2003 reserves are pre-acquisition reserve. Because the H Limited has acquired S Limited on 1st October. On 1st October 2003. Whereas these reserves are existing on 1st April 2003. So before acquisition. So whatever profit or reserves before acquisition, it will be called capital profit. That point, every problem I am saying, this is not a new point. And profit and loss account 80,000, 40,000. So 80,000 is the P&L account of H Limited. One point. When we make consolidated balance sheet, the P&L account and reserves of holding company will remain same, no change. Whatever reserves and P&L account balance is there in H Limited, that will remain same. S Limited P&L account balance 40,000. This we have to see whether this 40,000 is earned after acquisition or before acquisition. Then creditors. Creditors simply we have to add up in consolidated balance sheet. Sundry assets, simply we have to add up both sundry assets. S Limited, 100% shares of S Limited 3 lakh. That means investments. H Limited has made the investment in S Limited for an amount of rupees 3 lakh. Purchase price is 3 lakh. 100% shares, no minority interest. The profit and loss account balance of S Limited is the profit made in the year 2003-2004. The profit and loss account balance of S Limited is 40,000. S Limited profit and loss account 40,000. And in adjustment it is saying this 40,000 rupees is the profit earned during the current year. Current year is 2003-2004. 1st April 2003 to 31st March 2004. So 40,000 rupees are earned during the year. How many months are pre and how many months are post? Shares are acquired on 1st October 2003. So October, November, December, January, February, March. 6 months. So during the current year, 6 month period is pre-acquisition, 6 month period is post-acquisition, half. So 40,000 rupees is the profit. In that 40,000 we divide into two. 20,000, 20,000. First 20,000 pre-acquisition profit, next 20,000 post-acquisition profit. The post-acquisition profit is a revenue profit and pre-acquisition profit is a capital profit. So I have explained the complete problem. Now the solution, the consolidated balance sheet will be as follows. Consolidated balance sheet of H Limited and its subsidiary S Limited on 31st March 2004. Now this is the blank balance sheet. First of all, we'll make equity and liability, shareholder fund, share capital number 1, reserves and surplus number 2, minority interest is not there, just put a dash. For the sake of formality, I am writing. Because in this problem, it's a 100% wholly owned subsidiary. It's a wholly owned subsidiary. Complete subsidiary company has been purchased by holding company, no outsider. Minority interest, no non-current liabilities, debentures not given in the problem, put a dash. Current liability, trade payable, third no. Then non-current assets, fixed assets, tangible 4, intangible 5. Non-current investments are not given in the problem. Current assets are also not given in the problem. For the sake of formality, I am writing it down. Now we have to take the amounts in notes. Working note first we'll make. In working notes we'll make all calculations regarding minority interest, capital profit, revenue profit and goodwill or capital reserve. These are the basic things we have to do. Working notes. After that, notes forming part of financial statements. Now first of all, it's a wholly owned subsidiary because 100% shares are purchased by H Limited. Secondly, profit and loss account balance on 31st March 2004 is 40,000. Date of acquisition 1/10/2003 and date of balance sheet is 31st March 2004. So 1/10/2003, 1st October 2003, the shares were purchased. Balance sheet 31st March 2004. So 6 months before, 6 months after. The pre-acquisition profit. The current year profit 40,000. 40,000 ka half, 20,000 pre-acquisition and remaining 20,000 post-acquisition. Second, calculation of goodwill or capital reserve. Cost of investment. In the balance sheet it is given investment made by H Limited in S Limited is 3 lakh. From this we deduct paid up share capital and capital profit. These two things we have to deduct. Always. Paid up share capital. See the balance sheet of S Limited. Balance sheet of S Limited is given 2 lakh. The share capital of S Limited is 2 lakh. Now capital profit. How much is the capital profit here? Capital profit is 20,000. Pre-acquisition profit. Pre-acquisition profit is capital profit. Capital profit 20,000. Now reserves. Now you can see the reserves on 1/4/2003. Beginning of the year, reserves of S Limited are 50,000. 50,000 rupees are the reserves of S Limited. This is completely capital profit. Any profit or reserves appearing before acquisition of shares are capital profits. Now add up the three. 2,70,000. Subtract 3 lakh minus 2,70,000. Goodwill 30,000. Goodwill is not given in the problem. We have to find out goodwill like this. From the cost of investments, subtract the paid up value of share, the capital profit and the reserves of S Limited. Now notes. Notes forming part of financial statements. First note is share capital. In share capital we take only share capital of H Limited. How much share capital? 5 lakh. So 50,000 shares of rupees 10 each, 5 lakh. This 5 lakh rupees we have to take it in share capital. Second, reserves and surplus. In reserves and surplus, we take the reserves and P&L account of holding company as it is. So holding company H Limited, how much are the reserves? Reserves are given 2,50,000. P&L account is given 80,000. So 2,50,000, 80,000. Apart from that, the revenue reserve or revenue profit of S Limited. Revenue profit means post-acquisition profit. So post-acquisition profit is here 20,000. This 20,000 we have to take. Post-acquisition profit of S Limited. So total reserves and surplus 3,50,000. No minority interest, no current liability, no trade payable. Trade payables, creditors. You add up the creditors of both 70 plus 10, 80,000. Take 80,000. Liability side 9,30,000. Now come to asset side. Tangible assets. In tangible assets, we have fixed assets 6 lakh and 3 lakh. So 6 lakh, 3 lakh, 9 lakh. 9 lakh I have taken. Intangible asset, goodwill. Goodwill is not given in the balance sheet. We have calculated goodwill in working note. How much goodwill we got? 30,000. So goodwill is equal to 30,000. Here I have taken. No current assets, no non-current investments. Total 9,30,000 tallied. That's it. So I have explained each and every point. If you have not understood in the first trial itself, second time, third time, if you watch the video, definitely you will get a good command. Starting it will be difficult because same type of problems what we have to do in working notes and how to make the notes forming part of financial statements, that you have to keep it in mind. That's it. Now I am reading out the problem number 3. Third problem. From the balance sheets given below, prepare consolidated balance sheet of X company limited and its subsidiary company Y company limited. So X company holding and Y company subsidiary. Equity and liabilities shareholders fund. Share capital 2 lakh shares of rupees 80 each, 1 crore 60 lakh X company, and 20,000 shares of rupees 80 each, 16 lakh in Y company. The holding company share capital 1 crore 60 lakh and subsidiary company share capital 16 lakh. Reserves and surplus 96 lakh, 24 lakh. Holding company 96 lakh, and this 96 lakh as it is will come in consolidated. Whereas subsidiary company reserves, we have to see whether it is a pre-acquisition reserve or post-acquisition. If it is a pre-acquisition reserve, it's a capital profit. Now, current liability, trade payables, simply we have to add, no difference at all. Current liabilities will add up. Assets, non-current assets, fixed assets, tangible. Both the companies' tangible fixed assets we add up. Non-current investments. Now see here. Shares in Y Limited, 18,000 shares of rupees 80 each at cost 28 lakh 20,000. How many shares are there in Y Limited? See the liability side. Y Limited we have 20,000 shares given in the problem. In Y Limited 20,000. Out of 20,000, 18,000 shares are held by X Limited. 18,000 shares are held by X Limited. So remaining 2,000 shares are held by outsider, minority interest. Previous problem minority interest was not there. Here minority interest is there. 2,000 shares are minority interest. Next, current assets, inventory, trade receivable, cash and cash equivalent. Simply we have to add up. All the three. Inventories we have to add up. Then trade receivable we have to add up. Cash and cash equivalent we have to add up. No adjustment, nothing. Only balance sheets are given. Problem is very, very easy. Now see here. First of all, blank balance sheet will make consolidated balance sheet of X company and its subsidiary Y company as on. Now equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2. Then minority interest number 3. Here we have minority interest. We have to find out how much is the total. So before finding out the amounts, first you have to make a complete blank balance sheet. Format of the balance sheet. Later on, all the amounts will take it in notes. Then current, non-current liabilities are not there. Debentures are not there. Then current liability, trade payable 4. Then assets, fixed assets, tangible assets 5. Intangible assets, non-current investments, current assets, inventories, trade receivable, cash and cash. Already you are aware about this format. Now the most important is notes, working note. Now total number of shares in Y Limited 20,000 given in the problem. In subsidiary company Y Limited, total number of shares 20,000. Number of shares held by X Limited. Holding company, how many shares? It is holding 18,000 shares. Holding company holds 18,000 shares of subsidiary company. Then share of X Limited. So out of total 20,000 shares, 18,000 shares X company is holding. So share will be 18,000 by 20,000, 18 by 20 or 9 by 10. 90%. 90% of share capital of Y Limited is being held by X Limited. Remaining 10% are held by outsider. The share of minority interest 2,000 by 20,000, 1 by 10. So 9 by 10 is the share of holding company X Limited. 1 by 10 is the share of outsider minority interest. That we have to keep it in mind. Now, reserves and surplus of Y Limited. If nothing is given in the problem, we assume that these reserves and surplus are pre-acquisition reserve. यानी X Limited Y Limited को खरीदने से पहले reserves में 24 लाख रुपीस था. तो this 24 lakh rupees is completely capital profit. It's a capital profit. Now we divide. This 24 lakh rupees of Y Limited will be divided between share of X and minority interest. तो share of X कितना है 9 by 10. तो 24 lakh into 9 by 10, 21 lakh 60,000 is the share of X Limited. And 24 lakh into 1 by 10, 2 lakh 40,000 is the share of minority interest. So we have bifurcated the total reserves into share of X Limited and minority interest. The capital profit is 21 lakh 60,000. This will be considered for calculating goodwill. Now, calculation of goodwill or capital reserve. Cost of investment. See the balance sheet. In the balance sheet, investment made by X Limited in Y Limited is 28 lakh 80,000. From this, we deduct two items. The first one, paid up share capital. So how many shares the holding company is holding? 18,000. What is the face value of each share? 80 rupees. So 18,000 into 80, 14 lakh 40,000. Second one, capital profit. What is the share of capital profit of X Limited? 21 lakh 60,000. This is the share of capital profit of X Limited, 21 lakhs. दोनों को ऐड कर लो 36 lakh. Now subtract 28 lakh 80,000 minus 36 lakh. You are getting negative figure. You are getting negative figure. If you get negative, it means capital reserve. If it's a positive, it's a goodwill. Positive goodwill, negative capital reserve. Here we have negative value. 7 lakh 20,000 negative. So we are taking it as capital reserve. Right? Next, minority interest. Minority interest, paid up share capital 2,000 shares. 2,000 shares of rupees 80. So 1 lakh 60,000. Then share in reserves. In reserves, the share is 2 lakh 40,000. So 2 lakh 40,000, total 4 lakh. So you can see here, share capital 1 crore 60 lakh. How 1 crore 60 lakh? The share capital of this one. First of all, minority interest we have calculated. Now I am coming to the notes forming part of financial statements. Notes forming part of financial statements. Share capital. Now we'll see the share capital of X Limited, holding company. 2 lakh shares. 2 lakh shares of rupees 80 each. 1 crore 60 lakh. Same 1 crore 60 lakh I have taken. Second, reserves and surplus. In reserves and surplus, first of all, the reserves of holding company should be taken as it is. No change. So in the problem, you can see the holding company X Limited reserves are 96 lakh. Same 96 lakh. Profit and capital reserve, sorry. Capital reserve just now we got. Capital reserve 7 lakh 20,000. 7 lakh 20,000 capital reserve. Add up both 1 crore 3 lakh 20,000. 1 crore 3 lakh 20,000 where it is here. 1 crore 3 lakh 20,000. Reserves and surplus. Then minority interest 4 lakh. Already I have calculated minority interest here. 4 lakh rupees minority interest. Last one, trade payable. In trade payable we will take creditors. So add up the creditors of holding company and subsidiary company 51 lakh 20,000. We have taken all the items of liability side. The total of the liability side 3 crore 18 lakh 40,000. That's it. Now we'll come to the asset side. Tangible assets. Tangible assets are given in the problem. I don't have the space, that's why I have not written, but in examination you should write down here. Fourth, after fourth note you should write fifth note. In fifth note you have to take sundry assets. You have to take fixed assets tangible. Fixed assets tangible 1 crore 74 lakh 40,000 plus 3 lakh 20,000. You add up both, you will get 1 crore 77 lakh 60,000. Simply you have to add up both the amounts. Second, intangible asset, goodwill is not there. If there is goodwill, we would have taken the goodwill. Then next one is non-current investments are not there. Then inventories, add up the inventories, 48 lakh plus 80,000. So in notes you have to write down all these things. I don't have the space, that's why I have not written. But in examination you have to write down. Simply you have to add up. You should write down inventories, add up both the amounts, you will get 56 lakh. Then trade receivable, 32 lakh plus 11 lakh 20,000. 43 lakh 20,000. Last one, cash and cash equivalent, 20 lakh 80,000 plus 20 lakh 80,000. 41 lakh 60,000. That's it. Now your balance sheet asset side will get tallied. 3 crore 18 lakh 40,000. Here also 3 crore 18 lakh 40. That's it. So what I want to say in this problem is almost 90% points are same. 90% points are same. Only few points, only some 10% points are different in each problem. So you have to focus. You have to focus on those new points. On those new points you have to focus. That's all. It's not at all difficult, provided you must have the patience and you must have the urge to learn, to acquire the knowledge, to get a command on the subject. From that perspective, if you are watching the video, definitely you will get a lot of gain from these videos. If your objective is very narrow, simply to pass the examination, this much of explanation is not required. Simply mechanically, isko idhar le, tally ho jata. What will happen? You will get the degree, but you don't have the confidence. I am explaining each and every point. Hope you have understood my lecture. If you are satisfied with my lecture, give a like to the video. Give your comments on these lectures. I am waiting for your comments, how you are, visualizing these lectures. And lastly, share this channel in your group, in your friend circle, so that more students can watch these videos. And subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video. Come on, now we'll start the next problem. That is problem number 4. See carefully, fourth problem. On 31st March 2006, the balance sheet of Raju Limited and its subsidiary Rani Limited stood as follows. So Raju Limited is the holding company, Rani Limited is the subsidiary company. Both the balance sheets are given. Equity share capital 8 lakh rupees for Raju Limited and 2 lakh rupees Rani Limited. General reserve 1,50,000, 70,000. Profit and loss account 90,000, 55,000. Creditors. Then asset side, fixed assets are given for both the companies. 75% shares in Rani Limited at cost 2,80,000. That means Raju Limited holds 75% of share capital of Rani Limited. The remaining 25% shares are held by outsiders. That is minority interest. Then stock, other current assets are given. Draw a consolidated balance sheet as at 31st March 2006 after taking into consideration the following information. First point, H Limited acquired the shares on 31st July 2005. Actually, we are closing the accounts on 31st March 2006. Here, the holding company purchased the shares on 31st July 2005. So August, September, October, November, December, January, February, March. So 8 months are post-acquisition. So during the previous year, 8 months are post-acquisition, 4 months are pre-acquisition period. Then S Limited earned a profit of 45,000 for the year ended 31st March 2006. During the current year, from 1st April 2005 to 31st March 2006, during this year, the profit earned by Rani Limited is 45,000. That's it. Now we'll prepare the balance sheet. Consolidated balance sheet of Raju Limited and its subsidiary Rani Limited as on 31st March 2006. First, we'll make the blank balance sheet as usual. Equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest number 3. Then current liabilities, non-current liabilities, current liability, trade payable number 4. Total. Non-current assets, fixed assets, tangible, intangible. Non-current investments, current assets, inventories, trade receivable, cash and cash equivalent, other current asset. As usual, every problem will first of all make the blank balance sheet with note numbers. All these amounts we have to calculate in the notes forming part of financial statements. Now first of all, we'll make the working notes. Calculating the goodwill, capital profit, revenue profit, minority interest, all these things we have to calculate working notes. Raju Limited, share of Raju Limited 75%, so share of minority interest 25%. First point, clear. Now profit and loss account of Rani Limited on 31st March. So profit and loss account of Rani Limited on 31st March 2006 is 55,000. Given in the balance sheet. If you see the balance sheet, the profit and loss account of Rani Limited is 55,000 on 31st March 2006. And in the last line of the problem, it is given profit earned during the year. During the year, 45,000 rupees, current year profit. So this 10,000 rupees profit is before the current year. That means it's a capital profit. It's a capital profit. 31st March 2006, 55,000. During the year, 45,000. So before this year, 10,000 rupees was the capital profit. Now current year profit is 45,000. Current year profit 45,000 in this post-acquisition profit. The date is given on 31st July. The shares were purchased. So 8 months are post-acquisition, 4 months are pre-acquisition. So 45,000 into 8 by 12, 30,000 is post-acquisition and 15,000 is pre-acquisition. Current year 45,000 profit we have divided into pre-acquisition and post-acquisition. Now we have to find out the capital profit. The capital profit means all the reserves and profits earned before the date of acquisition. So first of all, general reserve of Rani Limited, balance sheet, it is given in the balance sheet. It is completely pre. So capital profit. Profit and loss account of Rani Limited on 1st April 2005, 10,000. This we got it from here. On 1st April 2005, how much is the P&L account? 10,000. Then pre-acquisition profit, current year. During current year, 45,000 rupees profit earned. In that 45,000, 30,000 relates to post and 15,000 relates to pre-acquisition. So this 15,000. Take the total, 95,000 is the total capital profit. Total capital profit. Now Raju Limited's share is equal to 75% of 95,000 is 71,250. 75% of 95,000. 71,250 is the share of Raju Limited. Minority interest 25% of 95,000, 23,750. Capital profit over. Next is revenue profit. That means post-acquisition profit. 8 months profit. From 1st August 2005 to 31st March 2006. 8 months profit. 45,000 into 8 by 12. That comes to 30,000. Now in this 30,000 is the post-acquisition profit, revenue profit. In that 30,000, how much belongs to Raju Limited? 75% of 30,000, 22,500 belongs to Raju. Remaining 25% belongs to minority interest. So these are the basic calculations regarding revenue profit, capital profit. Now we have to find out the goodwill. Cost of investment given in the balance sheet is 2,80,000. From this we deduct paid up capital and capital profit. The paid up capital 75% of 2 lakh. 2 lakh rupees is the total share capital of Rani Limited. So 75%, 1,50,000. Share in capital profit, already we have calculated capital profit here. Share of Raju Limited is 71,250. Take 71,250. Take the total 2,21,250. Deduct 2,80,000 minus 221,750. 58,750. This 58,750 is the goodwill. Last and final working note, minority interest. Minority interest, first of all, will take paid up share capital 25% of 2 lakh rupees. Rani Limited 2 lakh. So 25% 50,000. Share in capital profit, here we have calculated minority interest share is 23,750. Share in revenue profit. Revenue profit we have calculated here. Minority interest is 7,500. The total minority interest is 81,250. That's all. All the working notes calculations are over. Now we are coming to the notes forming part of financial statements. First note, share capital. The share capital will take of Raju Limited holding company as it is. Now reserves and surplus. In reserves and surplus we take the general reserve and P&L account of Raju Limited as it is, holding company. Holding company का general reserve P&L account same to same we have to take. So general reserve of Raju Limited 1,50,000, P&L account of Raju Limited 90,000. Now revenue profit from Rani Limited. Revenue profit from Rani Limited. This is the revenue profit. How much is the share of Raju Limited? 22,500. In revenue profit, 22,500 is the share of Raju Limited. That 22,500 we have taken. The total of reserves and surplus is 2,62,500. Here we have taken 2,62,500. Now third, minority interest. Minority interest already we have calculated 81,250. Now take it against the third schedule, 81,250. Trade payable, fourth schedule, trade payable. Raju Limited, Rani Limited. The creditors of both Raju Limited, Rani Limited add up together 2 lakh. Total of liability side 13,43,750. Now we'll come to the asset side. Tangible fixed asset, fifth schedule. Tangible fixed asset, Raju Limited, Rani Limited add up both 6,50,000. Then intangible asset will take the goodwill. Goodwill already we have calculated 58,750. Take 58,750. Inventories. Inventory stock. So here inventories Raju Limited, Rani Limited, both the inventories we have taken simply from the balance sheet. We are taking both the companies. No adjustment, nothing. Inventories. Then other current assets are Raju Limited, Rani Limited, add up both 3,53,000. That's all. So this is the end of problem number 4. So 4 main problems we have completed in this holding companies. We'll continue the next problem in the next video.